Mullen Automotive stock just closed the day 18% lower, and there's no press release, no investor update, and no filing to explain it. On paper, it's a quiet day. But in reality, it's yet another sign that confidence in this company is rapidly evaporating. And here's what's really strange, and arguably more concerning than the price action itself. As of today, Mullen's official website appears to have removed, or lost functionality for, its entire archive of news releases and financial disclosures. That includes the investor relations section, which is now either completely blank or returns a page error depending on your browser. Press releases? Gone. SEC filings? Not there. Quarterly updates? Unavailable. Now, let's be fair, this could be a technical malfunction. Maybe they're migrating servers. Maybe someone messed up a WordPress plugin. But given the timing, and given everything else going on with this company, it raises a very reasonable question. Why is a publicly traded company under regulatory scrutiny suddenly removing access to its own public disclosures? Because this isn't just any company. Mullen Automotive is already in violation of Nasdaq's minimum market cap rule. Back in February 2025, they received formal notice that their market value had stayed below $35 million for 30 consecutive trading days, triggering a compliance deadline. And unless Mullen can keep its market cap above $35 million for 10 consecutive business days before late August, they're likely to be delisted from the Nasdaq entirely. So you'd think this is when they'd be doubling down on transparency. This is when you'd expect the company to be posting updates, clarifying plans, and restoring investor trust. Instead, we get silence. And now, even worse, we get missing records on their own homepage. And that silence isn't just from the website. Let's not forget the recent Form 14A, filed on July 8. In it, Mullen asked shareholders to approve another reverse stock split, anywhere from 142 all the way up to 14100. And they also asked for permission to issue shares tied to over $15 million in convertible debt and warrants, which could result in massive dilution, far beyond the normal 19.99% threshold the Nasdaq typically allows without shareholder approval. So we already knew a dilution wave was coming. The vote is set for July 22. But now we're seeing the market get ahead of it. With the stock down 18% today alone, and over 45% in the past week, it seems the street is pricing in what Mullen won't say out loud, that this isn't about growth or expansion anymore, it's about survival. And if that wasn't enough, Form 13G per A, filed on July 10, revealed that Esousa Group Holdings LLC is still involved as a significant stakeholder. For those who don't know, Esousa has been tied to some of the most toxic financing arrangements in the microcap space. Their involvement almost always signals one thing: more dilution to come. So to recap, the stock is collapsing. The company's market cap is shrinking by the day, likely now well below the $35 million threshold. The company is pursuing another massive reverse split and dilution package via SEC Form 14A. A known toxic financier is involved, per Form 13G per A. The company's website is suddenly missing its financial disclosures. And the SEC? Silent. Where is the oversight here? Why is a company that's already teetering on the edge of compliance allowed to operate this opaquely? Retail investors are being left in the dark, literally, because the very tools they'd used to do their due diligence have been stripped from the company's homepage. Now maybe Mullen will fix the website tomorrow. Maybe this is a brief technical hiccup. But let me ask you this: does that inspire confidence? Or does it feel like just the latest in a long series of unprofessional, shareholder-hostile moves? Because at this point, the benefit of the doubt is gone. The next big date on the calendar is July 22, when shareholders will vote on whether to approve the reverse split and the massive share issuance plan. If approved, you can expect more dilution, another artificial boost in share price, and probably another crash shortly after. Because that's been the cycle. And unless Mullen can magically find a way to boost its market cap above the $35 million threshold, and keep it there, Nasdaq delisting could become reality in August. Transparency is critical for any company, especially one fighting for survival. So whether this disappearance of financial info was a mistake or not, the optics are terrible. Investors are already nervous. And moves like this? They only make things worse. Stay alert. Stay skeptical.